All right, it is 2 o'clock Eastern. I think we can get started. Good afternoon, everyone. Welcome to MBA Education's Instant Income Clarity, the first machine-only income decisioning and mortgage webinar. Today's webinar is sponsored by True. My name is Amanda Straub, and I'll be helping out with today's session. Before we get started, I wanted to point out a few things about the Zoom platform. You can bring up the Q&A box by clicking on the Q&A icon located at the bottom of your screen. You may need to shake your mouse for that icon bar to appear. Once you click the icon, a box will pop up, and this is where you can ask questions for our presenters during the Q&A period at the end of our webinar. Also, at the end of our presentation, we'll have a short survey, so please make sure you provide your honest feedback on today's session. All right, I'd like to introduce our moderator for today, Rick Hill, Vice President of Industry Technology at Mortgage Bankers Association. All right, Rick, the floor is all yours.
Thanks, Amanda, and thanks everyone for being here today with us. We appreciate the opportunity to talk to you about things that we're all dealing with in the industry and solutions that can help us as we look to become more efficient, to be more rapid in our responses, frankly, to improve that customer experience with things. And so today's webinar. And we're going to talk about a topic, right? Getting to that income decision. It's one of those activities that happens in the origination process that can be problematic from time to time. We all know we deal with some issues, and we'll talk about that. And so we're gonna go through a little bit of this. We're actually going to show a solution, right? That is out there. And I think, showing matters a lot because it helps to understand, what it is we're talking about. We are comfortable with questions, may take them as we go along, and certainly we can do them at the end. If we don't get to them, please put them in the Q&A box. With that, let me introduce the two folks who are going to be our stars today. So Steve Butler is the CEO at True. He is joining us, as well as Ryan Edmonds is the CEO at Candor. So they are going to be the featured individuals. I will try to set them up to be able to share, their expertise. So let's go ahead. I'm going to start, but we're going to start by backing up. We don't want to say what the solution is. I'm going to start maybe with Ryan in the sense of what what are the problems in this space, right? What are the things that the folks in a lender shop are dealing with day to day? Can you start kind of with just stepping back and saying, what is it we're dealing with here?
Yeah, and Rick, I just want to say thank you for moderating here. We're very excited to be here with True and talk about the solution that we're bringing to market together. The problem is nothing new to those that are attending this session. Income analysis, while it has improved over the last several years, it's still one of the slowest, most error-prone parts of the mortgage process. But now it is harder to qualify than ever before. We used to see W-2 base pay wage earners. Now you've got wage earners with a second job, a third job even. There's more self-employed borrowers. There's more variable income than ever before. So it is harder to qualify because of elevated home prices and continued elevated rates. And we have seen now over 3 million underwrites, and we say that borrowers are like snowflakes. No two are alike. So we've seen a lot of different edge cases, and there continue to be additional edge cases these days, as again, it is harder and harder to qualify for your typical mortgage these days. With the income bottleneck that we're discussing today, we've seen the rise of digital verification services. Those are fantastic, still relatively low conversion. We'll see more and more adoption of that over the next several years, but they're also costly, and lenders don't necessarily want to incur that cost early in the process. So you've still got this situation where an LO is trying to calculate income. Then the processor's trying to calculate. Then the underwriter's calculating income. You get the checker checking the checker, checking the checker. And ultimately, it can lead to a bad borrower experience if the LO gets the calculation wrong and the borrower thinks that they're good, they're qualified. It turns out they're not when the underwriter opens the file. So what we are focused on doing it right the first time and locking down that qualified and ultimately warranted income upfront in the process.
Yeah, Ryan, let me just, if you go back to that slide, 1 second. I want to point out just how much time lenders spend getting good quality borrower data. When you think about this is the classic garbage in, garbage out scenario, right? And so if the data is got inconsistencies in it, if it's not matching what was on the documents and it's in the LOS, you're going to get bad calculations, you get wrong calculations. And so lenders know this. I mean, they're not putting out bad income. So the reality is that they're spending tremendous amounts of time to get their data to a point where it's quality enough to drive the underwriting process and any of the downstream work streams that have to occur to manufacture this loan. The stare and compare time, the manual extraction, the manual indexing, dealing inside of Encompass or any LOS, that's where all the time is lost. And it's time that they have to do because if the data is not strong, the rest of it falls apart. So we'll spend some time talking about how machine only can get you quality data much quicker. But this is a big bottleneck in the process as well.
Maybe you guys can take a minute. You know, we've had technology for a while. Why has it been hard to really to automate previously? What's is it been kind of impediments out there? You know, kind of what's been the impediment there?
Can I take that, Steve?
Sure, yes, definitely, Ryan.
Yeah.
Yeah.
So we're in the automated AI underwriting game. We're not in the data extraction game. We've partnered with True for that. So I can tell you with confidence that until now, data extraction from docs has never been reliable enough to fully remove humans from the loop. So that is kind of the holy grail with respect to data extraction, classification, and indexing. And True is leading that effort, and we've seen it. We've seen improvements recently with the latest AI models and LLM adoption. And I don't want to get into what Steve will eventually talk about, but that's really been, I think, what has held back this opportunity is the accuracy with respect to data extraction from borrower docs.
Yeah.
Sounds like a bit of a sea change. There'll be something that we can do, and I know we'll cover that a little bit more as you pointed out. Let me ask a question, and I'll start with Steve. But you know, you guys are not the same company, right? You're two different companies.
Right.
What made you guys to come together? What was the light bulb? What was the business reason, the whatever that made you guys say, wait a minute, we can look at this problem a little differently, besides the AI part, obviously, but what else?
Yeah, no, it's a great question, Rick. I mean, first of all, there's two big problems trying to be solved here. One is getting the calculations to be able to handle, right, the new type of borrower and to do that automatically so that you've got warranted income. But the other big problem, and it is an enormous problem, is getting data quality. So we said to ourselves, if we could put kind of best in class of each of those areas together, best decisioning and best quality data together, then you'd have a very streamlined solution that would start to take away some of those bottlenecks that Ryan was talking about on the previous slide. You could actually get income in a few minutes. You might be able to actually have the LO get income much faster. I mean, you look at what we're saying on this slide here is that the fight for every loan is fierce, meaning that, the sooner you qualify the borrower, the stickier that relationship. So this is why speed is so important. Speed to decision is just so critical. You're only going to get that if you take these two AI powered companies and put them together. And that's kind of what we've done with this solution.
And if I can, Rick, if I
Go
can
ahead, please.
add to what Steve said there. So speed is critical, but also trust. And that's where, it's very difficult these days to cut through the AI, hype, what is hyped out there and what is real. True automation in this case requires consistency and repeatability so you can build the trust of the end user. The underwriter is not going to trust an income calc if it was wrong 1 out of 10 times, even 1 out of 100 times. When the cost of being wrong on income, because income defects represent a significant portion of overall loan defects, the cost of being wrong is significant. So building that trust is very difficult. We've done that over the course of several years. We've over 600,000 closed loans with zero repurchases. We've had 13 separate instances of repurchase claims that we've successfully defended against because we were able to show this is why the technology made the decision that it did or the calculation that it did, and this is how it fits your guidelines. So that consistency and repeatability and that track record is so critical to adoption of new technology. So it's really the difference between AI promise, the hype, and AI proven.
Yeah.
What's out there, what exists today, what can we trust and actually implement into our workflows. So
Yeah,
when
in
we talk
fact, let
about
me,
locking a borrower early in the process, sorry, Steve, I get on a roll with these things.
no,
When
it's
we talk
okay.
about
That's okay.
the LOs, locking that borrower, getting a qualified income early in the process, you're good. It's warranted. The underwriter does not have to go and recalculate income later in the process because you have a warranted income. Then it creates that borrower surety that the LOs are looking for and ultimately a better borrower experience.
Yeah, I just wanted to give you the other bookend on the trust because, if those of you who don't know True, I mean, pretty much the mortgage insurance industry is standardized on True or processing, hundreds of thousands of loans a year through the MI industry, and they're getting the accuracy through that. But in the life of the company, we've done tens of millions of loans through True's platform. So again, you've got that really trusted data quality combined with the proven track record of Candor. So again, that's another great reason to put these two platforms together and give you a very streamlined solution.
Yeah, I want to come back, I think, to trust a little bit later too, because you guys are mentioning probably one of the biggest reasons overall end to end that we have such higher cost, right, today than we used to have in the industry. Everybody checks everybody else because nobody trusts anybody on anything, right? And when you can really take a piece of that process and say you can now trust that, that's a world of difference, right?
Yeah.
No longer you had the checkers checking the checker kind of thing. It doesn't mean you don't have validation. We're not talking that. We're not trying to imply to anybody you don't have to check things, but the human redo part, I think is a big part of that trust factor.
Yeah.
So
Yeah, well said.
So
Steve,
what,
oh, go
yeah, go
ahead.
ahead, Rick. No, Rick, yeah, I'll take your questions or just keep going through this webinar. How you want to do it.
Yeah, yeah, I was going to ask it. So we haven't mentioned the tool. So maybe Steve, if you wouldn't mind, the name of the tool, right? What we're talking about. You guys have come together and you have a solution. Make sure the official name of the tool so folks know, and then let's talk about what really makes that different.
Yeah, we're actually going to give in a second everybody a demo of the solution, but it's called Instant Income Clarity. And it's a really tight, streamlined solution that takes you from borrower document upload through warranted income analysis and verification in a very touchless way, right? So first step is borrower docs get uploaded. You'll see this in the demo. It can upload into the LOS. It can upload into the True platform, which is called MOS, which we'll talk about a little bit later. And then the True background AI workers. This is the AI that we've built over many years are actually going to do all the indexing, extraction of data, and then cross-validation of data across all the documents and with the LOS so that when you're done with that stage, you've got very high quality data that you can trust. It's consistent across everything. And then the platform makes an automatic call to the Candor decisioning engine and passes all the data, the borrower data that was extracted, and then Candor takes over to generate an income report and some notifications and some other analysis back to the MOS platform. So the user is never leaving. You're not jumping between platforms. It's all done within one platform, which is a challenge that the industry has today, that there's multiple tools being used, right, to sort of get to income. Well, here you've got one platform. It's all consistent UI, very streamlined as you move from stage to stage in manufacturing. And then and then at that point, the report you get back is a warranted income analysis and verification. That's the solution, end to end. It happens very, very fast. You'll see it in the demo. It's going to take a couple of minutes to get through this process.
Well, maybe if it's all right with you guys, let's go to the demo, right? I know for me, what is it? The picture's worth 1,000 words,
Yeah.
right? Let's get started with this.
Yeah, so we're going to run right now, and so it's going to actually be happening in real time. Well, the time, it's a video, but you're going to see real time performance here. So the first thing we're doing is uploading documents. We could do this in the LOS, or we could do it right here. And so you can see we're selecting a bunch of tax documents, bank statements, pay stubs, work number. And so those things get uploaded and instantly start to get indexed and extracted. And so it's happening right now in the actual speed it would take. And so we're done now in a couple of minutes. We're done. And we found a bunch of documents. In fact, if you could pause it right there, Liz, so I could speak to this a little bit. So what we found in those uploads is we found bank statements, we found pay stubs, we found tax documents, we found the work number and so forth, W-2s. So all of those were indexed and already extracted in just a couple of minutes, less than a couple of minutes. The other thing to point out is these percentages, 99%, 98%, 100% in most cases, in all cases except for one. And what that means is the AI was so confident that it basically put that kind of number on it. So the human doesn't have to review those. It's as good as human accuracy. There is one here, this W-2, which is at 90%. So if you could run that, Liz, we'll take a look at why the AI wants us to look at that one. And so if we click on that thumbnail, you can see it's a pretty grainy image. And so we got it right, but we want to click it and verify it. And so that we did. And so now it moves past that process. And we could look at all the other thumbnails if we needed to, but they're all at such high confidence level, there's no need to do that. So the next step is, of course, data verification. And if you could pause it right there, super important point for me to make here, which is this is where lenders really get tripped up because you've got data extracted off of documents, but you don't know if this data is consistent across all the other documents that produce the same data. For example, is the borrower name the same in all these documents? Is the address, is the employer's address? There's lots of data that has to be consistently the same. And then you got to see what do you have in the LOS already for those data fields. And so what we do is we automatically, the AI does all that for you. All that steer and compare that processors have to do today to look across all the documents in the LOS to make sure it's all set. The AI is doing all that for you here. So we present that as what we call a data panel, which is what you see right here. We basically tell you what did we extract, what is the AI think the data should be, what we call the true validated value? What is it, what is most consistent that we found is the value that's coming off the documents? And then what's actually an encompass? So the processor, if you could run that, the processor has an easy way to sort of see if there's any discrepancies. And so they look through this, and in fact, you can see here's an example where the validated value is a particular street name and the value that's in LOS is a different street name. So we've got to fix that. So you have a pull down, the processor basically makes the correction and then you go on. And so we present the data that way in a very fast way. The processor can just make sure it's all cross-validated. When you're done with this step, you have 100% accurate data that you can really trust. Remember that garbage in, garbage out thing I talked about earlier? You can now trust this data to go to income. So at this point, True makes a call to Candor for the income. I'm going to hand it off to Ryan to cover you with the rest of the process.
Yeah, thanks, Steve. So once Candor receives this clean, trusted data that has been validated across the 1003 and other borrower docs, we run it through our income logic and we deliver a qualified income calculation. You'll see a summary here on the screen. And we also deliver a PDF loan income verification report that you're going to see in a minute that breaks out the detail associated with this income calculation. So you'll see at the top here in green, we've got qualified income. This is from the VOE. The VOE takes precedent over some of the other docs in the file, like the pay stubs and the W-2s. Um, yeah, Liz, thanks for pausing right there. You'll also see below in gray, we have potential income. So in this case, Candor identified undisclosed rental properties on this file with income associated with those properties. So should you want to include that income in the file to qualify the borrower, you can do so by updating the 1003. And when you do so, that income will become qualified up at the top in green. So you'll see we've identified a number of properties here. I think it'll keep going beyond the detail is detailed calculations. This is really more for the underwriter's sake. The underwriter wants to check, how did Candor reach this number? How did it get this number? We provide that level of detail in this report as well. So we show our work. The underwriter has access to all the detail behind the calculations. And then I think the other important thing to note is that this supports all income types. So wage earners, self-employed, rental properties, as you see here, pension, Social Security, you name it, we cover that income, and it's ultimately warranted according to Fannie and Freddie and FHA guidelines by Candor's, an extension of Candor's existing warranty.
So I'm going to ask, one of the things with AI that folks have worried about is the show your work, right, or providing evidence kind of thing. Can you talk just a second about it? You implied that a second ago, right? But I think you're addressing something that is historically been a little bit worrisome for people with the newer forms of AI.
Absolutely. It all goes to trust, right? And again, I kind of use this analogy. We use it internally. I'm going to try it out externally here, but self-driving cars, right? Like equating self-driving cars to an automated underwriting solution. 99% accuracy in the AI world is fantastic. But would you get into a car that wrecked 1 out of 100 rides? Absolutely not, because the consequences of that 1 out of 100 are so significant. It's the same. I'm not equating a car accident as the same as a repurchase. There's a significant financial consequence if you have a repurchase event. So in that case, you need 100% accuracy, trust, reliability, and showing the work is our way of building the trust from the underwriter's perspective.
Yeah.
Excellent. We have a couple questions. I think it may be good because they seem to tie back to the demo. So first question is integration with other LOSs and whatnot. Is it in addition? I think Steve, you had mentioned Encompass, but it integrates with other LOSs also.
Yeah, well, of course, it's an API based system, API first system, and so integrations are done. So we've integrated to a number of different platforms. I mean, a lot of them are proprietary platforms that have been built, and they in some ways are more difficult. But integration to other LOSs beyond Encompass would be not be a challenge for us at all. We've built it for that.
So if someone has their own LOS, for example, because you've got an API-based system, it shouldn't be that hard for them either.
Right, exactly. Yeah, yep. And our integration with Encompass is all event-based, using webhook technology. So we're not beholden to the fact that you're locked out of Encompass all the time. You can work in MOS outside of that, and then when it opens up, you can basically upload and keep Encompass or any LOS fully synced. Um, it's a very, very fast and very, very scalable integration that we've done with Encompass, and we would do that with other LOSs or POSs or whatever that is.
And that was very important that you said that. I was going to ask, right? Because in theory, with an API, you could tie into the POS, the LOS,
Yeah,
whatever platform, even in theory at some point on the servicing side, right?
yeah.
If someone wanted to use it for a modification or something to that nature.
That's right. Exactly right. Yeah. I mean, the way that most lenders are using True today is the POS puts the documents into an unassigned folder, e-folder, let's say, and then True is monitoring that and monitoring events inside of the LOS and picks up those events in this case, documents, and then indexes and extracts those very, very quickly and puts them back into the E folders labeled correctly and the data presented in that data panel. And then the validation of that data occurs, and then the LOS is fully updated with highly trusted data for underwriting like income or post-close or any of the other things that need to happen downstream. You've got trusted data at that point.
Oh, so someone asked, but I think the answer someone said their company. I'll say it that way. I think if the lender has their own system, will it be able to integrate? I think we just said
Yeah.
yes. Really should be able to, because of your API based system. The timeline to move from hey, let's do business to integration ought to be a lot. It's not like in 5 seconds, but it's a lot easier than it would have been, let's say, a couple years ago with the way we used to do things.
Yeah. In fact, if you go just, Liz, a couple of slides down to the slide after this one here, let me just speak a little bit about the integration platform. I mean, the platform itself is called MOS, which stands for Mortgage Operations Service, but it's really the first one in the industry that allows you an end-to-end way to deal with loan manufacturing. You can move from stage seamlessly. It's a common data layer. So if you're integrating to MOS, you're basically integrating to the data layer, right? So if it was another LOS, if it was a POS, it was another income solution like we did with Candor, a point of sale, a post close, whatever those solutions are, they would integrate to that data layer, and so the data would be consistent. The UI is consistent across the whole thing. So depending upon what your persona is, you stay in the loan and you basically do your manufacturing stage and it just moves through the process. And so I think it's the first one that gives you that full automation end to end. And so this is what we mean by the MOS, and it really raises adoption when you take this approach.
Let me go back. There was one other question specific, but it says, is indexing in true predicated on using the naming conventions that you determine?
Yeah, it's all configurable. The lender has their own taxonomy, their own naming conventions that they want to use, and so all of that is done. What we have, the way we get accuracy, I should have covered, is that we now have both, you know, 8 to 10 years of machine learning where we've processed tens of millions of loans, but we also have an LLM model now that has been tuned for the mortgage model, and so those are orthogonal models that are trying to get to the same answer. And so when you get to the same answer, you have high verification, high validation. And so very proprietary, very sophisticated AI approach built over many years to get this kind of machine-only solution.
So there's another question here, and I think it's good to go ahead and address this one also. That talks about kind of is this an out-of-the-box solution, or is customization needed or required or necessary? And you can talk about there's probably some, obviously always, but if someone sort of wanted to not have to customize a lot, I think is the point of this. What would they need to do if they didn't
Hmm.
want to customize a whole lot?
Yeah, I'll speak to mine, and then Ryan, if you've got something to talk about that as well. I mean, the only customization really is the mapping of the taxonomy. You have your own names, maybe have your own names of e-folders. You might want to have an e-folder for pay stubs, or maybe you want to have a separate e-folder for each borrower. It's all depends upon how they want to do business, but that's what we call mapping. And that's a pretty quick process. We have tools that do that pretty quickly. So we could have a customer up and running in indexing and extraction in the first 30 days. And at that point, they're processing real loans. And so that's very typical experience in the MOS platform. We we love, most of this is out of the box. Today we support over 1,000 different document classes and over 15,000 extractions, that we've done over the years. Now, not every lender needs that many extractions, but you probably need 200 or 300 extractions. We probably have them already done. And you probably want maybe 100 doc classes supported. We have those already covered. So there's no like training the AI and grabbing extra fields. That's all going to be done out of the box. It's just the mapping that has to get done. And
That's great to
Yeah.
hear.
I can
So,
speak to Candor. out of the box with Candor, and we also can work on customization and income overlays to the extent that lenders wanted to pursue something like that. But
Can you
typically
guys
out of the
maybe
box.
take, can you take a second? Well, your customers today that you've worked with, and sorry, I'm ad-libbing here, apologies in advance. Do many of them really try to kind of take it the way it is and not customize a whole lot initially? Or do a lot of them say, this is my world, it's going to look like this, and they're going to retrofit it the way they do it? Or is it anywhere between any of those extremes?
Well, I'm going to tell you, having done this in the mortgage industry for 10 years and working with lots of different leaders in this, what I come out and always say, look, we can boil the ocean and we might be working on this a year or two from now and had no value, or we can really focus on a use case that you want to get up and running quickly, and that can be dramatically faster. And we really encourage using it out of the box, and focusing on a use case, and then take your AI journey further, right? So if for example, a great use case we call is loan setup and data quality. Let's get your loan file, let's get all your indexing extraction out of the hands of LOs and processors, and let's have it done by AI background workers. That they can do it, that's what they do. The AI does that very, very well and very, very fast. So no longer have to worry about that. Let the processor do that final validation of data quality in the data panel, and then the rest of it is handled automatically. So anyway, we try to focus a lot on what I call the low-hanging fruit, and there's a lot of that today now with this solution.
Let me ask one last technical questions popped in here about where or how it can run. Is it a on-premise solution? Is it cloud-based? Either sort of, can you guys talk about that?
What True is the MOS is fully cloud-based, public cloud-based, and very scalable. You can scale it pretty much unlimited. It's all microservices architecture. That's our preferred way to go with all of our new customers. Yeah.
Great, thank you. So let me come back to Ryan for a second. Talking about so coming out of the how does it work part, and let's talk about productivity and all. So I'm a lender, right? And one of the things I'm looking for, right, is some form of productivity improvement. Can you talk a little bit about what you're hearing, what you're seeing from customers? And then maybe if you wouldn't mind segue a little bit into oh my God, my job's going away, or whatever. Can you talk a little bit more about the changing roles that you see?
Yeah, absolutely. As far as productivity, our lender clients are reporting higher quality for one. So I mentioned our track record with zero repurchases, and then about 4 times productivity in their fulfillment operations. So that's processors and underwriters, because Candor is designed to take the heavy lifting off the underwriter's job so that they can focus on higher value tasks. In addition to that, we already talked about this in earlier slides, but it's creating that borrower surety. When you have a verified, warranted, trusted income calc to qualify a borrower, as an LO, you can lock that borrower knowing that you're not going to have issues down the line when that loan gets into fulfillment. And if you can eventually get your underwriter to trust the calculation, and we can talk about that and how that process goes, the underwriter does not have to look at income again because they can trust it. It's a warranted income number, and they can move on. So to your second question about replacement, it's the fear of new tech. It's the fear of AI and what it can do. We always say we will never replace human underwriters. We intend to supercharge human underwriters. So we're removing the grunt work, the compiling docs, extracting data, calculating even complex income scenarios. That frees the underwriter to do higher value, more critical thinking, judgment-based work. It's a better use of their time, and frankly, I think that they would enjoy much more than the grunt work. It's adoption is the fear is real. And again, we tell underwriters, we're here to make you hyper productive. There are underwriters that adapt quickly. There are others that are slower. We build that trust over time. And that's why the trust is so important these days with anything automated and anything that's AI generated as well. The other thing that we haven't talked about is the workforce shift. If we're talking about humans in the process, veteran underwriters are retiring. The new generation of underwriters, and LOs for that matter, they expect modern tools
Yeah.
like this income solution. So our combined solution with True, we automate even complex tasks. And so we can make new junior underwriters perform like experienced A+ underwriters. And that's the power of our combined solution. And then I mentioned the warranty. The warranty extends to all the data extracted and all the calculations, and it's backed by our AAA rated insurer. So it's a very powerful outcome for lenders that want to take that leap into AI adoption, but do it in a smart, methodical way and not trying to boil the ocean, as Steve kind of alluded to.
Yeah.
It looked back over the last, it doesn't seem that many years, but back to 2020, we hired up like crazy, right? The interest rates went low. We hired up, late 2021, early 22, right? Sort of the volume started to drop off the cliff. And we spent a couple years, unfortunately, laying off a lot of folks. I know when I'm talking with folks, they're very interested in how do I avoid sort of that up and down. But if and projected volumes, they're coming off finally their historic lows, if you will. They're looking for ways to not have to hire a million people, right? Can you talk a little bit about that concept and how you're thinking about that?
Well, I'll give you some real examples. I mean, so we've got lenders today that are doing four times, are doing four times the volume, and in this particular case, it's post-close, and have not had a staff, and they said in the previous we would have been staffing, and so I think that this again, if you can get AI to if you can trust the AI, first of all, and it can handle the work, you can have that be a great augment to the existing team, and scale through the AI. Don't scale through hiring and then going through that firing, phase that has happened, for decades in this industry. So I think we're finally there because we have AI that we can trust enough to basically give it to the background workers to do that work. That's a big sea change, I think, in this industry.
Yeah, let me add to that, Steve. So you know what happens when you hire, right? You get less experienced people and quality, there's an inverse relationship with quality, right? So quality goes down, you have more repurchases. We want to break that hiring and firing cycle, and we can do that with AI these days. Because this is a pure machine solution, there's no human behind the curtain here. This is scalable, and you can do more with the same amount of resources today. And we can finally break out of that terrible cycle of hiring and firing.
Yeah.
So could you guys, I think we have a couple of minutes, maybe talk about some of your experiences with folks. I know the sort of the who moved my cheese, right? Sort of the famous book, and folks, don't want to initially change. I'm resistant. I'm human, right? I get that. You maybe talk about what really happens as they start to use this. What is, a little bit of going back and forth, a little bit of slow. How does that sort of evolve to where they truly end up trusting the product?
Yeah, well, it's really important that these solutions are sold not top down, but really involve the user community in the very beginning, because at the end of the day, adoption is only going to come from users basically seeing the benefit. If it's just another tool to learn and they don't get any benefit from it, then they're not going to adopt it, right? And if it slows them down, certainly. So what we were always a big advocate of is bringing the user communities into the pre-sales process. And part of that, if you will, part of that use case design, what are we going to focus on first and who are going to be the users, and get them bought in early. And if you do that, then the implementation goes actually quite fast and the adoption happens quite fast. And so it's really it has to be set up early and set up well. Um, I would say that the trust in the AI comes pretty quick, but it's not instant. It's not the first day one. They still will review and make sure things got it right. They're going to look inside of the LOS. Did it label it correctly? Did it extract the data correctly? So you're going to see some of that in the first couple of weeks. But after some point, when it's every time you go in there and it's correct, you're not gonna check it again, and you're just gonna move on and trust that the AI background work is doing exactly what it's supposed to do, and I don't have to worry about coaching it, mentoring it, or correcting it. And so that's what we see in practice, Rick.
Ryan, thought any addition there?
I think Steve nailed it. You build trust over time. You get
Yeah.
adoption over time. It's it's the checker checking the AI instead of the human that tried to do it. But you build that trust over time with the track record. Yeah.
Yeah.
Yeah, I think that's important because a lot of times folks, I know I again I for myself I buy something. Why is it not solving my problem immediately, right? And there's a learning curve, right? There just simply is. But it sounds like it's a pretty rapid one for folks, and they can gain that trust and therefore gain the benefit. So
And Rick,
that,
one other thing for me to point out too, you noticed in the demo that both of these solutions are very transparent. Candor shows all the calculations. True shows the data panel, which is exactly what we took off the documents and what's in the LOS. And so that's how you get trust. You can actually see how it actually got to the answers. And if the answers get more and more correct each time, you basically trust it at that point. This is not a black box where you basically have to just, close your eyes and hope it's right. You're going to see everything and learn along the way.
be really addressing the worry of explainability, right? That folks are expressed concerns about. You got that, right? So as soon as people gain comfortable, they gain comfort with what it's doing, then they know that the explainability is always going to be there, right? I think, it sounds like a real important facet of this. So let's look a little bit futuristic here for maybe Steve, starting with you. Um, you guys, this is the start of a partnership, I'm guessing. What's next? What's the evolution sort of a path as you go forward?
Yeah. So we're collaborating a lot on the roadmap. I mean, we see a great opportunity in the whole asset analysis area. There's a big problem with undisclosed liabilities. A lot more of this buy now, pay later type lending. And so as asset analysis becomes more important for non-QM, for the gig economy, for self-employed, you need the ability to look at 12, 24 months of bank statements and get a cash flow out of that, right? And to look at all these different things. So we're already doing a fantastic job of extracting everything out of a bank statement. We can with high accuracy get every transaction out, and we'll fold that into things that are being done by Candor on asset analysis along the way towards fully autonomous manufacturing of loan manufacturing, which will come from the Candor solution that's already in place today. We just need to feed it from True's data.
Excellent. So there's a lot more coming, right? Is what I think I'm hearing.
Yeah. Yeah.
Still working, through this one, but the opportunity to um, continue to add as you go forward is a real positive, right? So,
Yeah. You'll
um,
see, you'll see, you'll see additional buttons on that MOS dashboard that I showed in the demo for each of these interoperable solutions as they come out.
Excellent. So Ryan, another question, came in while we were talking here around the rep and warrant that you mentioned. Can you talk a bit about that, and are you having to utilize that? Is it utilized often? Is it more a comfort for people now because they're getting the right answer? Can you talk a little bit about that?
Absolutely. So we started the insurance or the rep and warrant coverage to build that trust. We found that our clients, underwriters, were re-underwriting files that Candor had already performed its decisioning on and recalculating income. And you lose the productivity gains if you're doing
Right.
redundant work, obviously. So the warranty was intentional to build that trust. If Candor did it, even if it's wrong, it's covered. We're covered in a repurchase event. The good news is we've never lost a repurchase claim. Our third-party insurer has never paid out a single claim. That's that's the great news for them. They've collected premiums along the way, and it almost makes me sick how much we've paid to them in premiums. But it also means that our track record, our tried and trusted income logic and income calculations can be accelerated upfront for the LO use case so that you really can lock qualified income right up front and know that you've got it. It's not going to change when it gets to underwriting. And you have that surety that you can deliver to the borrower. And that's really meaningful these days when everyone's fighting for the same, still limited borrowers. We're all hoping for rates to come down a little bit, for volumes to pop. We don't want the hiring and firing cycle again. We want to grow together through productivity gains, leveraging the latest AI, and we've talked about a lot of that. But at the same time, the reality is today, LOs are still fighting for a limited number of borrowers, and we're going to help them win.
So you mentioned a couple of things there. The rep and warrant, it sounds like you offered, it's like, hey guys, you kind of you gotta try it, right, to get comfortable with it. So you realize that was a important facet of getting folks to utilize it, and great answer on not having a problem. Um, but then you're going to back to very much, you pivot back to the value, right, statement, which is, hey, loan officer, up front, early, quickly, we can give you an answer much more rapidly. So it's not just changing the workflow in the back end, right, of what someone's doing or who's doing what, but it can change the behavior that a loan officer has with a consumer, right? And which is, I think, maybe sometimes lost when we talk productivity, because productivity always seems like this back end mentality, right? You're
Right.
talking about it from, I get to capture my consumer because I've given them a decision up front.
That's exactly right.
Yeah, Rick, it was great for you to pick that up because that's the paradigm shift. I think a lot of some power, some decision power shifts to the LO who is engaged with that borrower and wants to basically, qualify quicker and make that relationship stickier. And so I think that's an opportunity that is going to change a lot of behavior.
Let me just see. There's a couple more questions popping in. Sorry, for some reason they were not showing up on my screen. So let's go ahead. If it's yep, great. Let's take some more questions here. Okay, so there's a question sort of again on the rep and warrant, and Ryan, I'll let you keep it kind of high here, but a little bit detail on sort of where this starts, what's the process and the timeline. Is there says is there an end date, close by date kind of thing? So I'm kind of guessing sort of maybe a little bit of sort of the parameters, if you will, around how that rep and warrant works.
Sure. And I won't get into the nitty-gritty details, but we cover for conventional loans, we'll cover repurchase event for 3 years following the closing of the loan. We cover the easiest way to think about this is that if Candor made the decision, if Candor calculated a number, or if Candor should have made a condition, meaning fired a condition that it didn't, it's covered under our warranty and ultimately covered by our AAA rated insurer that's backstopping it.
Excellent.
What we do not cover is fraud. We also cover the data extraction. That's another very key component here. So when we talk about Fannie and Freddie integrations with their income calculators, we've got Freddie now. We'll have Fannie very soon. That gives you rep and warrant relief on the calculation itself. But if you send it bad data, you don't get the rep and warrant relief, right? There's no coverage there. So our warranty extends to that coverage, extends to cover the data extracted. It also covers more than what Fannie and Freddie are providing rep and warrant relief on today, which is rental income, pension income, other types of income that aren't covered by those income calculators.
Excellent. There's a final question in here around billing. Is it basically kind of all the production? Is it per loan? And if it's more of a to be discussed when you talk to people, answer it that way too.
Yeah, it's a price per loan. You're paying it based on process loans per, price per process loan. So yeah, we can get into specifics when we engage with a lender in terms of their volumes and so forth. But that's how the basic business model works.
Okay. There's another question here, and this is a little quirky, but I'll try to rephrase. But I think folks, perhaps it's an aggregator type question of potential use for a bulk loan acquisition, which is distinct, right, from an individual, right, at one up front. Is there some utilization of this product in a let's say at a correspondent aggregator type arrangement?
Well, without question, that's a big percentage of our business. We commonly see 1,000-page, 1,500-page loan files that have multiple CDs and LEs, and all that's got to be reconciled. So we have automated versioning. But that's, if you think about what a mortgage insurance company does, they have the quick decisioning that has to happen to get back to a lender with a price quote for insurance. And so we have that very fast AI-powered turnaround time, but then they also need to they have a period of time to do an audit on the loan file, right, to see if the pricing has to change, based on the loan quality. So they've got a short time. So we get the entire loan file at that point to process. So we're used by services, mortgage insurance, correspondents, originators. It's the same problem, and that's one of the reasons why we have 1,000 doc classes and 15,000 extractions, because we have to cover the universe of use cases in this mortgage industry, and we do.
That's wonderful. I want to be respectful of folks' time, and we do have a survey at the end of this where we'd love your feedback. But can we look at the page? I want to ask, how folks want to get in touch with you, right? There's always okay, how do I learn more? So there is a page here, right, with the websites of both companies, and through that, right, they can then get in touch with you all and say, hey, can you give me a bigger demo, right? Can you answer a little bit more questions? Hey, I want to have my IT team, right, sit in and say, how does this integration work, or whatever. They can connect you through this, right?
Absolutely. This is the way to get to us, through our website.
Excellent. Well, Brian and Steve, thank you so much for sharing your expertise and all today. Thank you all for folks participating. I'm going to turn it back over to Amanda. We do have a very, very quick survey that she would love for you all to do. But Ryan and Steve, again, thank you.
Thank you, Rick. Thanks for moderating.
Yeah, thank you, Rick, and thank you everyone for attending.
All right. Yes, thank you, Steve, Ryan, and Rick for that. As Rick mentioned, please, before you all exit the webinar, take a few moments to answer the evaluation poll questions I've just launched. Make sure that you click that submit button at the bottom of the survey when you're finished. Also, don't forget to check out our AI speed learning for the mortgage professional webinar. That's tomorrow, actually, at 3 p.m. Eastern Time. Visit nba.org for more info. Thank you again to our speakers for taking the time to present today and to our participants for joining. Enjoy the rest of your day, everyone.